As we continue to navigate the complexities of the housing market, new residential home developments are facing a myriad of challenges and opportunities. Joining me now to dive into the very latest data and insights on the residential construction trends is Michael Guckes. He is the chief economist at ConstructConnect. Michael, thanks for joining us today. I do want to talk about your recent report for ConstructConnect. You noted that a decline in abandoned or paused projects that are currently on the market. So talk to me about the key factors that you think are driving this change among owners and developers.
Yeah, that's a great question, Trinity. And I think a lot of it comes down to the financing environment. There has to be a right and efficient interplay between banks and financial partners. And of course, those owners and developers looking to build the future infrastructure of the nation. And so that's been the big challenge is making the financing work. And as the Federal Reserve has signaled, right, in recent months that it's going to lower rates and maybe even more aggressively than some of us initially thought, that has done a lot to help lower the number of forthcoming and potential abandonments and projects on hold. I think both the owners and developers and maybe the financial sector are both becoming much more optimistic about it, and that's really going to help propel future growth.
Now, the PSI, or Project Stress Index, also rose from 87.9 in August to 102.6 in September. What do you think caused this increase in the market sentiment?
Well, I wrote about that. I said maybe we were buying the rumor and now we're selling the news. And part of that is we have to remember that 87 figure was historically low. That was really a multi-year low. So to come back up to around a level of 100 really puts us back at a level that we were at in 2021, which was not a bad year at all. So keeping it in historic context, it's really a fine reading. We aren't very concerned about that part.
What does this say about the current state of the construction market compared to last year?
Oh, it's getting vastly better. I think expectations for financial markets, the availability of capital moving forward is going to improve, and that is exactly why we're seeing the improved numbers that we have over the last 6 to 9 months.
And after the Fed's interest rate cut, do you expect more new projects to start, or are there still challenges that could hold back growth?
Well, the financial challenges should ease, which is a great thing. Some of the other challenges, though, remain things like regulatory environment, and then, of course, labor and materials access. Those continue to be real challenges. And we see that in the labor cost figures more so than right now what we're seeing on the material cost side. We really need to figure out a way to make laborers more productive. That's really one of the biggest challenges holding back future construction growth.
And you recently cited that the idea of buy the rumor and sell the news could apply to the construction industry right now, especially with recent interest rate changes. Explain exactly what you meant by this.
Absolutely. So, of course, owners and developers are looking years sometimes into the future, right? They're going to build a structure and then it may not begin turning revenues over or making a profit for years to come, right? And so of course, they're trying to predict that market. And so, things like the Fed signaling become really important to them because it makes all the difference about whether those projects pencil out or not. And so as our interest rate expectations across both the financial sector and within construction change and evolve, right, that's going to affect how willing I think owners, developers, and the financial community are willing to invest now in projects that may not see a profit for 1 to 2 years or more to come.
Thank you so much, Michael. Again, Michael Guckes, chief economist at ConstructConnect.
Thank you.